right. Investopedia's new survey showing growing market optimism. Caleb Silver is the Investopedia Editor-In-Chief, friend of the show, of course. Caleb, great to see you.
Good to be back.
So Kate has data showing that retail investors aren't in it, but your readers have been.
Yeah, they want to be in it, and some of the huge journey because they don't want to stop believing here. They're as optimistic as they've been in 12 months, either cautiously optimistic or very optimistic, about 2/3 of them, and they are putting money to work. Funny, they weren't doing it in April and May. If you saw retail flows, they were really, really light, really low activity, but they started getting more involved, more interested as we hit these record highs, and then you had the NVIDIA story. So they're kind of not all in, but pretty close to all in, 2/3, very aggressive right now.
It's interesting, Caleb. So we always have the conversation, it's the stock market, the economy, and okay, fair. But what you just described, if you think about the optimism in terms of your readers and the people that respond, the flip side of that coin is the approval rating for the administration is at historic lows. So clearly there's something wrong there. I mean, what is your sense? Why the optimism in the stock market and the pessimism in terms of the economy?
Well, it's been a great time to be a shareholder. I mean, please. We have record highs after record highs. We have companies buying back their shares. We have new dividends, companies increasing their dividends. Are you not entertained? This is as good as it gets if you're a shareholder. That said, not everybody is, or not everybody has that concentration. When you look at the 401k balances, they really go to the top 1%. So the economy, stock market, not the same. But we do know the presidential election is their number one concern. It's been that way for a while, and we saw that heat up even more this round.
What's interesting, though, is that even though they're optimistic about the markets and they're feeling good, putting money to work, et cetera, they think that a change in administration would actually be better for the markets even. I mean, I don't know what better will be, but better.
Yeah, we asked them, okay, so if it's your number one concern, do you think either of these candidates are going to deliver better returns statistically, historically? Actually, they don't. But in this case, our reader said President Trump, about 37%, said that he would deliver better returns compared to like 23% for Biden. Not a huge split, but a split by and large. And these are, again, investors that have pretty large portfolios. They've been in it for a while. They may sniff the fact that maybe lower tax rates could come if President Trump gets elected. So there's a lot of things that they're boiling into that equation, I think. But the fact that they've actually made that decision, even on a very small scale, is interesting.
Caleb, the retail investor usually gets a bad name because they're always late. They always have this perception of being late on both the entry and the exit. Did the pandemic change any of that? Did they have more of a sense of the pulse of the market now? Have you sensed a difference from where the retail investor is sort of respected now?
Absolutely, and I think a lot of that has to do with time, right? Our bear markets are shorter, our bull markets are pretty aggressive. They've seen the stock market fall during the pandemic and then climb right back when the Fed floored interest rates. A lot of these people went through that in 2008, 2009. They're used to that sort of lack of moral hazard being there, so they want to stay invested, and they've been rewarded for doing it. They worry about concentration, they worry about inflation, they worry about all these things. The walls of worry are very high, but if you just kept worrying and didn't invest, you've missed one of the greatest bull markets in generations. So I don't think they want to miss out, and they've seen this before a few times. So even if they're a little bit trepid and a little bit worried about things that could happen, they don't want to be not invested.
Caleb, by the way, Caleb and I were talking music in the green room.
Sure.
And I noticed in the first sentence or two of him speaking tonight, he referenced "Don't Stop Believing."
Yeah, because we were talking about Journey, and I know you're going,
Journey.
And I know this is
I know Guy's a big fan.
No, before I ask the question,
table of rockers.
I want to say something. So it might be one of the worst 5 songs ever written in the history of mankind. Okay. No, I'm just, please don't at me. I'm just being true.
You could put that on the list of songs that Guy
I started this. I'm going to end this. Caleb, what about that $6 trillion in money market funds? What about fixed income? What about higher bank yields? What about some sense that actually bond market's starting to give up the ghost, and that actually either we should be pushing out duration and actually locking some of this in, or is that money coming into the stock market?
Yeah, when we asked Melissa's favorite question, what would you do with that extra 10 grand? Well, CDs are now fourth on the list. Individual stocks, ETFs, index funds, and then CDs. 6 months ago, it was CDs. A year ago, it was CDs, even as the market was rallying and coming out of those depths from that bear market. So there's still some people in there, and I think it's an age thing that want to lock in 6%. 6% is really nice. We asked them, though, if you have money market funds or accounts, are you thinking about moving some of that money into stocks? Still around 30% say, yeah, we're actually considering doing that, those that have them. So they do want to put money to work, some of them, but I think a lot of people are also comfortable having that cash and having that return right now.
Got it.
And they want to put it in the riskiest. So when you read risky for this group, Is that NVIDIA or is that someplace else?
Well, we asked them, what areas of the stock market do you think are in bubbles right now? And AI stocks and tech stocks they think are in bubbles. So I would consider that a little bit risky. When you look at valuations, you can't ignore the fact that they're pretty high. It's a little bit risky. These are not necessarily GameStop buyers and AMC buyers. These investors buy big stocks. They've held on to them for a long time. NVIDIA, Apple, Microsoft. We asked them the stocks you would buy and hold for the next decade. NVIDIA, Apple, Microsoft.